Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott. We've got, again, a fun episode for you as we do every day here on VCTV. But before we jump in, a big thank you to the LATOKEN team and to Maria for making today's episode possible. If you yourself would like to be an investor on a show similar to today's, joining my co-hosts and I, talking about different technologies, industries, and regions around the world, do reach out and we'll find the right spot for you. Today, however, we're going to be jumping right in to introduce my co-host because we're talking about a very important subject, Latin America, LATAM, if you will, and the rising opportunities, something that kind of falls short in many of the conversations that investors have. It's a huge opportunity with a rising middle class that we're going to jump right into discussing here in just a moment. But before we do, let's get to introductions. Dion, welcome back to the show. A little introduction and background for everybody.
Sure. Thanks, Kyle. Good to see you again. So I'm Dion DeLoof with Alpha Impact 8 Ventures out of San Francisco, and we're a early stage impact venture fund where in the last 3 years we've made about 10 investments with 7 of those companies that were either started in LATAM, headquartered in LATAM, or primarily serve LATAM markets. So happy to be here.
Wonderful. Happy to have you. Julio, welcome back as well. We know this is a huge area of focus for you, for those viewers that have been tuning into VCTV, but nonetheless, a little intro and a little background, please.
I run New York Bay Capital. Yeah, New York Bay Capital is an advisory firm that specializes in Latin America. I'm originally from Mexico. We've got 5 partners at New York Bay Capital, and 4 out of 5 are from Latin America. Even though we're based in New York, we have offices throughout the continent, from Buenos Aires, Chile, Peru, Colombia, Ecuador, all the way up Central America, and we even have a guy in Canada. I guess we could call him a Latin American guy, honorary in some way. But that's all we do. 80% of our business has to do with Latin American investments or advice, or somehow strategic, cross-border activity, where one side of the deal might involve Europe or the United States, but the other is typically Latin America. So looking forward to the discussion. Nice to see you all again, and welcome everybody.
Thank you very much, Julio. And yes, welcome everyone. Just so you remember, the comments box is open. I'm always pointing over here because that's where it's at on my screen. So the comments box is open. We'd love to hear from you. Please say hi and where you're joining us from around the world and tuning in from. Also, if you have any questions for us today, we would love to hear from you. So feel free to share those in the comments box. I'll do my best to ask them in real time as we are able to fit them into the discussion. If not, you can find all of our names at the bottom of the screen, and we'll definitely give you a shout out at the end of where you can find us further. Gianpaolo, welcome to the show. It's a pleasure to have you. A little introduction and background for everybody.
Thank you, Kyle, for having me. Welcome, everyone. This is Gianpaolo Parigi. I'm a serial entrepreneur, an investor, and an advisor, and a chairman of a single family office. And I'm very happy to be here today on this Latin American panel because I'm developing a technology incubator in Europe that will be also open to assist Latin American companies, startup companies in the technology space, to create truly global champions. So with this, I'll hand it over back to you, Kyle, and I'm ready to share interesting points of view and answer any question I can possibly answer here on this panel. Thank you.
Wonderful. It's going to be a ton of fun. It's Tuesday. We've got a lot to talk about, so let's have some fun because Tuesdays are fun. That's my new motto. So with that being said, Julio, I want to jump right to you. I mean, you've covered a lot of this market, and we've talked much on VCTV here about Latin America. So kind of give us an overview of what is happening in Latin America and why this is such a rising opportunity that both investors and entrepreneurs need to be paying attention to.
Well, I mean, first of all, we're talking about, close to, depending on how you add it, 500 million people or so in terms of a size of a market in Latin America. You've got giant Brazil, and then you've got Mexico. Just right there, you're almost at the over 400 million mark of population. And then if you start adding, Colombia, Argentina, large countries as well, and just move on down the line, you have a sizable population, all of which more or less, in terms of a consumer economy, are more or less at the same level of development. They share a common language, except for Brazil, but Brazil understands, Portuguese and Spanish are not that different. So when people speak slowly, you understand each other, and have cultural affinities. And so you can consider it a region, even though it's composed of individual companies that, individual countries that, sometimes behave in different ways, right? So it's a challenging region. It looks like it looks monolithical, and you can make that mistake to think it's kind of like China, where there's a lot of people, or India. Maybe India is a better analogy, with different regions, but basically one country. It's not quite that, but it is a nice agglomeration of people who tend to behave the same way. They watch television a little bit more than even in the US. They still follow patterns that are tested in terms of how to reach the consumer, how the consumer is going to respond, what kind of demands for services exist. And so it's an attractive region, but it's complicated. It's not quite as seamless as you would like. And so at the end of the day, people have made a lot of money in Latin America as investors, but only if they really spend some time understanding the similarities between countries, but also the cultural differences between countries. And really, they spend some time knowing the region, knowing the people. It's very difficult for someone to just come in and make money. But people who have dedicated themselves to the region have been, by and large, successful in generating good returns, right? In other words, it requires some investment, but it's going to probably prove profitable for you.
I like it. Thank you, Julio. And I'll come back to some of those roadblocks and some of those difficulties in just a moment. But before I do, Dion, anything to add in terms of Latin America and why this is such an opportunity now more than ever?
Yeah, certainly. Well, I think Julio hit on, amongst other things, and agree with all your points, Julio. But size of market, but more importantly, for our fund, we're predominantly a future of work and fintech fund, and our 7 LATAM investments have all been, broadly speaking, fintech related. And then we look at from a mobile first sort of environment and economy worldwide is, a huge driver. I look at one part is cultural, and I agree with Julio. You have to invest. I think you have to invest in founders that aren't necessarily exclusively, but it certainly helps if you're selling services in Mexico, and you need to have a team that actually understands the market and really understands it well. And then you marry the technology with mobile first. So the consumers, and certainly in fintech, want everything that's in their hand, whether that's everything from student loans to banking services to what have you. So then you've got to build the platform technologically that can scale, and you can do it with the margins that exist today, but realize what the size of the market is, which is really quite massive. And then it's very underserved. So when we look at a lot of the startups that, if they were born in the US or in Europe, they've really, in many cases, overlooked the LATAM markets. They've looked at Asia, they've looked at Eastern Europe, Western Europe, US, but for various reasons, it's been largely overlooked. And that's changing. If you look at the level of venture investment in LATAM in the last year or two, the number of reports, it's skyrocketing. So what I feel is, it's almost to me, LATAM for investor and certainly in venture circles is really being discovered in the last couple of years. And when I speak, I've been investing in LATAM really only for about 5 or 6 years. But when I speak with long time investors, they're saying, we've never seen it like this, but they're still trying to understand what it really takes to be successful. And I'll piggyback on your remark, Julio, is it's not monolithic. You can't look at here's 400 million people and we've built this service and now it's going to serve every single country and get adoption and scale without taking into account some of the differences by country that you probably have to build into your offering. but growing really, really rapidly. We're extremely excited about our LATAM opportunities.
Thank you, Dion. Gianpaolo, to you, same question. Why now Latin America? Why should people be paying attention to that?
Well, it's been a continent that's been most neglected recently over the last 3 decades. I mean, Africa that was lagging behind has taken over even with more conviction over the last few years than Latin America did. So that by contrast, Latin America has got a phenomenal pool of talents, intellectual talents, a very solid cultural background as a base, and I would say also a very decent level of infrastructure compared to other parts of the world that are there ready to be utilized and ready to be leveraged upon to do business. What has been missing has been other things, and of course has been political stability. But I think that today the opportunity is immense for technology startups and investors from around the world. There are a few SPACs even from the United States that have been, allocating earmarked capital ready for Latin America exercises. But again, as Julio and Dion said, it is not a coherent market yet. So, one has to go and utilize, discerning capabilities and discriminating capabilities to weed out those that are already ready to be invested in or assisted, and from those that are not yet ready to be assisted. For example, I see, because let's define the geography, we say Central and Latin America, we include also the central part of the bloc. And so in my opinion, Chile, Uruguay, Mexico, Colombia, and Brazil stand as the favored nations to attract most of the foreign direct investments in the region because of their adequate level of development, even their success stories in some industry sectors. Colombia even has a unicorn, it's the first unicorn in Latin America I can think of. So, I think it all is a good promise for the future. And then you have the second-tier countries, second-tier by no means because they would be less relevant economically, but just because of the complexity of the issues that they have faced and they are still dealing with. They haven't dealt as successfully as their tier one countries that I've just mentioned. They will probably stand to benefit sometimes down the road if the situation can be ameliorated. But there is one large macroeconomic aspect that I would like to raise because it's an issue that is not, unfortunately, controllable directly by the South Americans or the Latin Americans themselves, and it's currency risk. For investors, this is very important. With quantitative easing, I have to take it a little bit from far away, but I hope that my viewers and our viewers will be patient for 30 seconds to listen to what I would like to explain. Quantitative easing has put a lot of additional monetary mass into the market. And this year with COVID, we're printing at a tune of 15-20% more than in recent years even. That means that, the major currencies in the world, the US dollar and the euro, are de facto debased over 15-20%. Now, what happens to other markets, it's even more. There are countries that are seeing their currency debased of 50, 40, 50%, and there are the tier 3 countries that are seeing their entire currency debased. Argentina comes to mind in this. And I think this really is the greatest single element of risks for foreign investors into the region to try and hedge against this currency risk, because it's really everything else can be, I would say, addressed and dealt with good management, with attentive monitoring and overseeing, and of course with the know-how and the technology that are available. But of course, to intervene at the level of monetary mass is something that is beyond the purpose and the scope of any individual, even institutional investor. And so I think it's something that needs to be taken into the equation and factored in very, very attentively. Otherwise, the full benefit of the deployment of capital in promising young companies might be completely offset by the currency risk. Thank you.
Thank you as well, Gianpaolo. I mean, you got shaking heads. Julio, Dion, anything to add on to Gianpaolo's last point there? I see both of you shaking your heads in agreement. So anything to add? Julio, we'll start with you.
Yeah, there's nothing to disagree with. The currency risk is the number one thing that foreign investors think about when they, not only in Latin America, but everywhere, but particularly in Latin America. And look, I've been dealing with currency risk in Latin America for decades. It's, one would wish, right, that in a perfect world, Latin America would get together and decide to have a common currency. At least that way, you wouldn't have these divergences between one country and the other. That are almost sometimes provide a license for bad governments to start printing, their own currency like crazy, like Argentina has done in the past, and Venezuela and others. And it would have been great if at some point Latin America would have gotten together for that idea, like maybe Europe did. Anyway, it didn't happen. But the only thing that I could add to what Gianpaolo very accurately said is just give you an interesting example of a country that doesn't have its own currency, which is Ecuador. Ecuador in the late 90s decided that it had had too much trouble with having the government be in charge of their own currency. So they eliminated currencies and they decided to adopt the US dollar as the currency. This is different than other countries like Argentina, who once said, I'm going to have the peso be equal to the dollar, but still have pesos. In Ecuador, there is no, it's like Panama or Puerto Rico or Kentucky, right? It's just the dollars that circulate. So Ecuador has many problems, but what's interesting about it is that if you're a US dollar investor and you invest in Ecuador, you are basically exchanging dollars for dollars. There's no issue with the currency risk. That said, you're still at the mercy of whatever the Fed does, right? And you can't necessarily assume that all this quantitative easing that Gianpaolo spoke about is a good idea, right? But you're basically handing over the keys to your economy to people at the Fed or the Treasury or the President of the United States. That being said, another little comment I could make about this very interesting topic, about which we could have a whole conference, is cryptocurrencies have a new appeal to people in Latin America. Love the concept of crypto. Crypto marries the idea of having, an independent currency from your own. That also has some technological advantages, and maybe a place for you to keep your savings, and therefore become immune to some of that's the concept. I'm not saying it's working that way in practice, but in concept, the whole idea of crypto could, if governments were open to it, or maybe despite government opposition, perhaps in the future we are going to see, great demand and interest in crypto, and that could be a way to maybe solve the problem technologically that Gianpaolo refers to. But it's too early to tell. But I think those are just two interesting developments. But other than that, there really is no solution to the problem of currency risk.
Dion, anything to add?
Yeah, I mean, I agree with all that what Gianpaolo said, and Julio is, I think, if I put the hat on as if you're a company that's out raising and you're serving the LATAM market, and you're gonna run into that question every time, right? If you're making your pitch, no matter who you're raising from. And so, I think the companies at the easiest time raising are ones that mitigate the currency risk by providing services such as bill payment platform, or student loans, or foreign exchange. What Julio's talking about, we're investor. I'm not promoting them, but a company that is, we're not a crypto focused fund, but they're using crypto to do foreign exchange at an affordable rate for low dollar, if you will, exchanges. You can exchange $50 send it to a number of different countries. And instead of paying, 25% of the exchange and fees, you can come into a liquid crypto, come into it, come back out quickly. So, my point for those that are raising is you really can't control, as we say, the way the market is right now. We're sort of at the mercy of the monetary policies. But if you have an offering, or if you're starting a company or you have it, and you can come to investors, whether they be, anywhere else in the world, and explain, all right, regardless of what happens with the currency fluctuations, our business, whether our monetization model is we take a percentage of the exchange, et cetera, but we can show that we can build a profitable and scalable business regardless of what those fluctuations do, or at least hedge against that a little bit. You're going to have a much easier, kind of stating the obvious, but much easier time raising. And those are the companies that I see that are coming into the US, New York, London, Germany, and raising a fair amount of money. And they're showing that they can mitigate that risk. If you really are beholden to the fluctuation risk, it's still going to be extraordinarily difficult, I think, to raise your traditional BC rounds. Makes it awfully difficult.
And Dion, with that being said, I want to come right back on a follow-up question for you. Is where are the industries that there's opportunity in Latin America? I mean, if we look at Latin America a whole, I mean, aside from what we just talked about, what's going on in the countries or the region, as I should restate, where are some of the industries that are opportunistic that people should be building in now more than ever? Here, as we look at 2021, we've got, again, a rising middle class. We've got more attention on streaming. As Julio mentioned, there's more activity around peer-to-peer and fintech. Where, from your view, should people be focusing on as opportunities to build and invest within the region?
Well, I'm biased with fintech because that's what we do. But it's a hugely growing sector. I mean, look, people, I believe, not just in LATAM, want services that largely have been offered to consumers in first world market. So, and I won't just stay on fintech, but I take the more global view of really a mobile first fourth industrial revolution. I can look on my phone. We all take it ubiquitous in first world countries, but I want the services that make my life easier and more efficient, and then give me access to, on the fintech side, whether it's microloans, credit, and ability to be an entrepreneur and grow my business. So, I'd look at a mobile forward first. I'd look at very technology leveraged. I'd look at certainly, I think many companies in LATAM and more second and third world countries will say, hey, if I'm an entrepreneur, I'm used to coming and I'm raising money. If I go back to that theme and I say, all right, well, someone's saying you need to have margins where it's 40%, 50% gross margins and dropping, 25% net. And you can certainly do that. I'm not making the case that's not the case. You can't have that profitability or more in LATAM, but you've got to have a little bit of scalability, different lens to say, I'm going to go to this market. I'm going to start small, prove it, build a reputation is really, really important, even with a tech platform. Word of mouth is hugely important, I believe, in LATAM markets. But the big advantage there is you can actually grow and market your business without having to necessarily do the sort of first world, more traditional pay-per-click kind of approaches. So what markets is that? It's fintech, it's ride sharing, it's everything. It's health and healthcare and access to, could I have a physician, if you will, consult on my mobile phone? And that's not just in LATAM. Frankly, that's in underserved markets in the US that are not on insurance. So I think it's very, very broad by sector, but the lens that at least that I look at and we look at is, can you access those services with a device largely in your hand? Do you have a distribution model? And then scalability is how are you going to go to market and actually get your message out where you've got a populace that is not necessarily in all markets surfing the web to learn about you.
Thank you, Dion. Gianpaolo, to you, and then Julio, I'm going to close out with you on this one. But Gianpaolo, to you, what industries do you see as opportunistic within the region?
I still believe that the old adagio works. I mean, the companies that can attract investors are the companies that are capable of defining and addressing a B2B or a B2C need. So it's industry agnostic. Truth be told, if startups want to attract international investors, they have to be prepared to provide international answers to the requirements of the investors. In other words, they must be capable. The companies must be capable of demonstrating that their service or their products are needed on a global basis. Because incidentally, this can also, in part, edge and limit the risks that I was mentioning earlier on of the currency debasing. Because if you have a wider audience and you ship your products around the world, and you have international alliances and joint venture and suppliers and consumers and customers and clients around the world, definitely you're blending the local regional currency risk, and you sort of average down with, especially if you're selling in premium markets or if you are establishing presence in premium markets. So you are washing that out and dilute that type of risk. And by doing so, you kill two birds with a stone. Although no birds are killed during this panel, but you can also attract more investors. So your likelihood of becoming an interesting target for friendly partial acquisitions increase manifold.
Thank you, Gianpaolo, and also the disclaimer that no birds have been injured during the filming of this episode. So all birds are safe, to our knowledge. But nonetheless, thank you, Gianpaolo. Julio, to you, same question. Industries of opportunity that people should be paying attention to within the region.
Well, we already discussed the issue of the currency and how that really shapes risk in the region. So traditionally, the industries that have been able to attract capital and deliver good results are industries that are tied to the dollar or to the euro or foreign currencies in general. Meaning, anything that exports in Latin America can usually attract capital. Local market companies have a little bit more difficulty. And if you looked at the statistics, you'll always see that the rate of return or the capital cost incurred by businesses that are in the export markets is lower than the businesses that don't have the access to those export dollars out of the region. So exporting, I mean, obviously Latin America exports minerals. It's rich in minerals, so mining is always a good place to go in Latin America. Other exports that are big in the region are, of course, agriculture. Mexico, especially recently, has made a lot of progress in feeding the United States. But all exports, all countries from Colombia, Peru, Argentina, they export beef, they export fruit, they export a whole bunch of different things. And if you are close to exports, then that's a good industry to be in. And tourism is another one of these industries that attract capital in Latin America. Tourism is like an export industry, even though people come in to the country and enjoy the natural beauty of the beaches and the tourist destinations and the ruins of Incas and Mayas. At the end of the day, those are foreign tourists that come in. So investing in tourism infrastructure in Latin America is usually a good idea. Hotels, obviously, of course, online services that attract those types of visitors is a good industry to invest in. That said, because you have the local market, I agree with Dion. Investments that improve the lives of the local population today, especially where there's this tech leap where Latin America as a whole was famous because not everybody has a bank account, not everybody has a phone line, not everybody had a phone line in their house. So when cell phones came in, people kind of skipped that whole let's get a home phone, and they immediately adopted the cell phone, right? So you had a tech leap, and now cell phones are ubiquitous. You couldn't get even if you paid a lot of money, you couldn't get a phone line on your home, but now you can get a cell phone. And so the same thing goes for any of these types of services. You couldn't get a bank account. Now you can, right? Now your phone is your bank account. There are many companies, I don't want to name names, but there are many companies that have made a lot of money. There's several unicorns now in Latin America, and some of them are in fintech. So, the sky's the limit a little bit. If you look around, the Me Too strategy also works. If it worked in Europe, or if it worked in the United States, a few years later, you're going to find it in Latin America. And if it worked there, it probably will work in Latin America, because the consumer in Latin America is very aspirational toward the developed countries. They want to adopt whatever technology they read about in the media. They want to be part of Kim Kardashian's followers. And I did mention a name there, but so that's also not a bad place to invest.
Got it.
I think that the only people who have had trouble really in Latin America kind of investing in the wrong industries I've seen are people who believe that certain global trends in developed countries will also be adopted, but they're not. And the one thing that comes to mind is clean energy, right? People I thought were a little too quick in Latin America to invest in wind energy and in solar energy and in all these like clean energies. When in the developed world, they depended to some extent on government subsidies. And those government subsidies couldn't be found really easily in Latin America, because governments tend not to have that kind of money to be subsidizing certain things that are good for people or good for the environment, but maybe they have other priorities, right? Because you've got, a poorer population. So I have seen people getting burned in that kind of thing, because it's good for you. Like, those things take a while. Other than that, as long as you have good advice, good lawyers, good, don't just go in and jump in there. But if you have good lawyers, good advisors, if you take your time, you'll probably make good money. And in these and other industries.
Right. And thank you very much, Julio. So I appreciate this is great. I mean, I hope everyone out there is getting excited about Latin America and the opportunities that are existing. And I want to come around for closing thoughts and also where you can be found online. And in this closing thought, would love for your advice to those looking to begin in making their first investments in the region, or entrepreneurs looking to expand and enter the market for the first time. So Julio, you're last to speak. Let's start with you, and then we'll come to Gianpaolo and we'll end with Dion. So Julio, advice for investors making their first investment or entrepreneurs looking to expand, and then where can you be found online to continue the conversation?
Well, as I said, the best advice is to spend some time looking at the market, understanding the market, and having good advisors. That's a bit of a commercial for me, because it's part of our business to advise. If you find good people, good local partners, maybe more than advisors, I should have said, find a good local partner. It's always best if you go into an investment where you don't own 100% of it, but you have a local partner. The local partner is going to help. The local partner is going to open doors. The local partner is going to go complain to the government whenever there's a problem. It's difficult to manage any business long distance. So you need to try and have a local presence, and a local partner will do wonders, especially if you don't truly speak the language. Then that obviously is a barrier that you want to overcome by working with local partners who speak not only the actual language but the cultural language. So that's really the advice. But the first advice is look to Latin America. There is a general scarcity of capital. You'll be welcomed as an investor in Latin America, because people, tend to complain that they're never really included. I mean, when you look at investment dollars around the world, most of them are not spent in Latin America. In fact, they represent a very small slice of the typical pension fund, institutional investor, venture capital fund, too busy looking at their own market and competing in their own market. And yet just a little bit of attention to the Latin American world is going to uncover a whole area of opportunity where it's more of a buyer's market. Meaning you'll be able to really set the stage in terms of what your expectations are and what your conditions are, and you're not going to be burdened so much by competition as you might be in other regions. So that's generally my advice. How you can find me, and I can continue to proffer this advice, is by looking me up on LinkedIn at Julio A. Marquez, or through our website at New York Bay Capital, which is nybaycapital.com.
Thank you very much, Julio. Gianpaolo, to you, same question. A closing advice for investors and entrepreneurs, and where can everyone find you online?
Yes, well, it all starts always with a good due diligence. If the decision has been taken to enter the market, that's the first thing. I mean, and I have tested in my 30 years of investments around the world, two approaches are working beautifully, both of them. So I'd like to share with you. The first one is, of course, if you are lucky enough that you find a good local partner, that's always, nice to have. But I also recommend that sometimes you don't find the local partner or the best local partners on the first attempt. So I've also tested that it's very good and very beneficial to do the investments anyway on your own, because after you've completed some deals and you get traction, the best local partners will come to you. And you will be in a better negotiating position. Also, it will avoid the idea of remaining in the comfort zone, because by finding a local partner, basically you're not giving the local partner any real demonstration that you are going to do anything particularly beneficial for its side. And so it remains sometimes in the doldrum. The whole operation, the whole transaction remains difficult to develop, because sometimes a local partner idea becomes an alibi not to invest what is needed to be invested to open up sincerely and properly a foreign market. And because there is the intimate implicit expectation that the local partner will take care of most of the investments locally, which shouldn't be the case, and it's very rarely the case. So I think companies that want to open up a market must be seriously putting their dollars where their tongue or their thoughts are, and make the first move. And after that, probably the local partners will be more inclined to consider it as a viable conduit to doing business together, aligning with these particular entities. And I think it's really important to be sensible and reasonable when it comes to opening up markets. And let's not expect that the locals do everything on their own. Otherwise, they would do it without us. And you can reach me on LinkedIn. I'm Gianpaolo Parigi, or you can find me on Twitter and on most social media, or also by email at gianpaoloparigi1@gmail.com. And with this, back to you, Kyle, and thank you everyone for being on this panel tonight.
Thank you as well, Gianpaolo. Dion, close us out. Your piece of advice for entrepreneurs and investors. Where can everyone find you online?
Sure. Thanks, Kyle. So, if you're an entrepreneur and you have a business and you're trying to figure out how to expand your business into LATAM, my best advice would be, no matter where you're coming from the world, is commentary already, I think, from Julio was finding good partners. Look at who's been invested in that is perhaps already providing similar services or could be partners to you in the region. I mean, certainly from a fund perspective and who's raised money, no matter where they're in the world, I think there's a good handful of notable funds, and this isn't an advertisement for us, but whichever sector you're in, be it fintech or otherwise, is look at who's received the investments already and reach out to those funds and ask them for introductions. They may have some bias because they're investors in those businesses, but it's a fairly tight-knit community that I found in the certain sectors that companies that have really received the investment. So you'll probably find really good, well-vetted partnerships and partners that could help you expand into the region. I mean, conversely, and I'm always a shameless champion of, if you are a startup or a growth stage company that's coming from LATAM, we talked about earlier, the world's becoming flat. Largely what is great for LATAM is going to be great in many, many other markets. All of the businesses are largely thinking and need to be thinking global. But I would argue is if you've established your business, be it in Mexico or Chile or wherever in LATAM, if you've gotten a foothold and gotten some traction, what I'm oftentimes seeing is entrepreneurs that are in those markets that aren't going out to raise money, find partnerships as fast as they should outside the market. They're waiting too long to almost gain the credibility. And I argue is when you're successful there, you've got a great population of incredible education, et cetera, but just building your business as an entrepreneur to scale to global is I think you have to have tremendous grit, and it's harder than if you grew up in Palo Alto. So we love seeing businesses that have really cut their teeth in the market. Now they're looking to go more global, and I just highly encourage, if that's you, go out and find the funds that know your space and make an introduction. And I think that makes you unique, and they'll make they'll be happy to hear from you. As far as how to reach me, same. I'm on LinkedIn. LinkedIn is Dion DeLoof. Our website is alphaimpact8.com, and you can also find me on Twitter. Be happy to connect.
Wonderful. Dion, Gianpaolo, Julio, thank you very much for all the thoughts and insights, again, focused around today, LATAM or Latin America as well. Thank you, audience, for tuning in. If you like what you heard, make sure you click subscribe, share, and also like today's episode. And check out the archive on LATOKEN.com to hear from our awesome co-hosts today and all speakers of the VCTV family of investors from around the world. A big thank you to the LATOKEN team and to Maria for making today's episode possible. Make sure you reach out to Dion, Julio, Gianpaolo, and myself. We'd all love to hear from you and learn more about what you're building and what you're doing out there in the world to make it a better place. And do make sure you add context, where you heard us, where you met us, and what you would like to continue that conversation about. You can find all of us online, as they each mentioned, in their respected areas, but also on social media. Do reach out again. We'd love to hear from you. And with that, we'll be taking a short little break, and we'll be back here with more VCTV in just a few moments. I'm your host, Kyle LaCotte. We'll see you soon. Bye, everybody.
Bye-bye.
Bye.